Hello, everyone. Thank you for joining the crowdcast today on the real-world asset market. Today we have on the panel Lucas from Centrifuge, Stani from Aave, and Jeroen also from Centrifuge. And now I hand over to our dear guests, Stani first, to introduce themselves, and then to the others.
Hey everyone, so my name is Stani Kulechov. I'm the founder and CEO at Aave, and at Aave we built the Aave protocol, which is decentralized interest rate protocol where you can supply cryptographic assets and earn interest and see those assets grow in balance. And Aave protocol is one of the leading decentralized finance protocols out there. And one of the market we built is with Centrifuge, so-called real-world asset market that is gonna explode the whole institutional and DeFi sector, and will bring DeFi to the masses and all over the place. So, and thank you for having me here.
Thank you for joining. Hey, Lucas, do you want to continue?
Yeah. Hi, my name's Lucas. I'm a co-founder and CEO at Centrifuge. Like Centrifuge has been on this mission to bring real-world assets to DeFi for a while, and we've been sort of thinking always about how do we actually use all this amazing technology that we're building that allows people to lend and borrow and trade using smart contracts, using blockchains, right, for assets like real estate, trade finance, sort of like everything that exists around us, right? So the core of what we're doing is actually we're allowing people to bring these assets on chain, pool them, and create sort of like real world asset backed pools that you can then invest in and earn an interest on. So we, at the end of the year, together with Aave, launched the real world asset, or helped launch the real world asset market, which is actually the first market that now is using the Aave protocol to essentially create a portfolio of these different assets.
Great. And then Jeroen.
Yeah. Hi, everyone. My name is Jeroen. I am the CTO at Centrifuge. I've been working for quite a bit on our smart contracts, on Ethereum, and recently working together with the engineers at Aave to actually launch this market. I don't want to add much more on Centrifuge, which Lucas will talk about more, but I think what's really cool about the RWA market as well is that it's a really great example of kind of the composability of smart contracts, right? Because it's really combining the strengths of the Aave protocol, which is a really good protocol for lending markets, together with the Centrifuge protocol, which is really optimized for bringing these real world assets on chain. And that's something that would be very hard to build in the traditional finance space. And with these smart contracts in Solidity, it's really quite easy and it works very well. And that's quite exciting to see go live and now see it grow.
Great. So first of all, I want to invite everyone to ask questions. Crowdcast has this really nice feature that you can ask questions here below. Click on this button, add your question, and then it can also be upvoted or downvoted. And for the first part of the session, we have a little intro. What is the real world asset market? If you haven't heard about it, share some highlights, which will be done by Lucas. And then we also have some more insights from Jeroen. And we also have a surprise guest later on that will give you a bit of an input, like what are the asset originators today? Basically, what are the real world assets that are alive on the platform? And then we have a Q&A session where, I hope Stani can explain the different emojis in his name as well. And we have a little chat. So let's start here with Lucas.
Yeah. Quick, trying to explain a lot of very complicated finance stuff, and then adding some complicated crypto technology to it is never easy. But to explain the real world asset market and how it works, first, maybe just a very quick introduction on how Centrifuge works. So when we started looking at, okay, how do you let people borrow money against a house or a car or maybe future revenue that you receive as a business, like the one thing you realize is, okay, well, like there's 1 million houses in the US that people borrow money against, and there's even a bigger number of people, like way bigger number of different assets, right? So like you have this problem that, like, how do you find a borrower and an investor that both want to finance the same thing? Like, I want to finance this house and someone wants to borrow money for this house, right? So the right duration, the right amount, everything has to match if you sort of look at an individual asset. And it's obviously very different from how DeFi works today, or what is being done in DeFi today. I think we're at a point where, similar to how like stocks and like debt is traded in public markets in TradFi, DeFi is mostly around very, very liquid fungible assets, right? And so actually the technology that we've built, it's really just like, maybe the closest analogy is like a credit fund. So issuers can put different assets into a pool, and then as an investor, I can buy a token that represents a share in this pool. And so I get a few benefits. First of all, I get an exposure to a wide range of assets. So for example, New Silver is one of the real estate pools live on Centrifuge today. It's a little north of 20 million in size, dollars in size, and it's about 100 different loans actually, right? So I get this like diversity into investing in this. Of course, I can also choose, I don't need to invest 100,000 in this house. I can choose to invest 5,000, 20,000. I can come in and put in a bit more, right? And so issuers use these pools to bring these assets on chain and then offer it to investors. And investors can provide this capital. If you go to tinlake.centrifuge.io, you see all of the different pools. You can see how big they are, what assets are in there, the interest rates, the maturity dates, so how long the loans are usually going for. And so that's now grown to about 60 million TVL. So now, you mentioned composability, right? I think, which is super important and really makes DeFi what it is today, which is actually that, well, like, we don't have to build an entire system. We don't have to build the entire marketplace, everything. Actually, we're already using a bunch of different things for doing what we're doing. For example, we're using DAI and USDC stablecoins as ways to settle these pools. But of course, we also actually want now these pool tokens to be accepted as collateral in other DeFi protocols. And so the real world asset market is actually using the Aave protocol to allow these issuers who are building these pools of real estate, of trade finance, of consumer loans to actually borrow from that market. And if I want to deposit, and so say I personally have USDC and I'm going to want to put that to work, I can put it into that market, and I know sort of the Aave protocol allows any issuer basically that's whitelisted to borrow against their collateral, the tokens in the pools. And maybe Sonny, you're going to make a better introduction at some point on how you describe the Aave protocol, but I hope I did a decent enough job. But yeah, so that's the real world asset market. It's a deployment of Aave, of the Aave protocol specifically for real world assets. And there's a few things that are different. We have like generally much higher collateralization ratios, because unlike ETH, real estate is basically a flat line compared to the volatility of ETH, right? It's slowly increasing, hopefully, but not nearly as volatile, right? So like the loan to value ratio or the collateralization ratio can be much lower. We also sort of like did a few other things to make sure that this market actually works for it. Like the target interest rate, for example, is specifically set so that you can invest in very stable assets. You make a low yield, but it's backed by assets that are in most ways much like extremely stable compared to what like maybe other crypto assets look like. So yeah, that's maybe a quick introduction on what the real world market is. Yeah, I think maybe you wanted to show a few things, or Stani jump in as well. Yeah.
No, I want to just say, like, in general, before going too much into Aave, the Aave market and kind of like, I mean, Aave protocol and how the real world asset market works. Aave in general, like, what's interesting about real world assets and what's happening with the centrifuge kind of like a model is that, you know, when you look normally like decentralized finance or Web3 economy, a lot of value is derived by like communities. So you have a community is holding, you know, governance tokens, and maybe there's underlying protocol that has treasury, smart contract infrastructure that is yielding out, or values might be in different kinds of art NFTs. What is very exciting is that there's a lot of value in like the traditional economy, and I think what Web3 allows to do in decentralized finance is that if we are able to port that value into the Web3 ecosystem, we can transact on it. We can actually get a lot of access to capital, and essentially pull that capital back into different kinds of finance opportunities or back to real life. So essentially, like, if you look at kind of like all the value that we have globally, it sits in some sort of like a non-fungible real world type of asset at the moment. It might be about, you know, properties, commodities, infrastructure, nodes, debt. Like, this is just a big amount of value. And if you look at like the transactioning and everything, like, we have built kind of like a robot system in traditional finance where you could actually finance a purchase of a property, for example, but most of the infrastructural value is still uncapitalized, and it's locked within the value is locked within the assets. And if you are able to take that value into Web3, it's going to just basically grow the economy quite a lot, because you can actually use the capital one way or another. So for me, like, seeing the real world asset market coming live was not only kind of like a big thing for the Centrifuge team and the Aave team, but also like understanding that, you know, now that there's an infrastructure where you can just periodically get new assets listed, you have risk management, maybe in the future in a way to backstop the risk as a community. What you actually have is an infrastructure that can be scaled to any asset that is that you can have accountability. So I think it's just like, it's not just like one kind of like a big release from both of the teams, but also for DeFi, it just like brought a lot of new opportunities. And I think like in DeFi, we have been focusing for the past months into like how we can actually get a lot of yield out of, you know, thin air, and that has drawn a lot of traction. But looking back, like now with 6 months, like one of the most successful things, or maybe the successful thing for the past 6 months has been, or even more, is actually the real world asset market, because you have now a scalable infrastructure where you could get more value, real world value into it, and use it on chain. So this is something that is kind of like, for me, more DeFi 2.0 than anything else, in a good way.
Yeah, I think maybe you said something that I always talk about when I think of why we're building Centrifuge. We're building Centrifuge because like DeFi at the core has this idea of removing intermediaries and making finance more transparent and sort of accessible to everybody, right? And actually, when you look at borrowing money, it's extremely hard today. And there's so many ridiculous reasons in TradFi of why a business might get a loan, or why they might not get a loan, or why it's priced at 5% per year or 15%. And as you said, Sunny, I think by building DeFi and building this with smart contracts, with technology, with a lot of automation, and driven by sort of this community, we can actually bring better liquidity and better financial products to businesses and individuals that really struggle today for no reason. And that ultimately, I think, makes it much more exciting than, say, today's financial system, which is just geared towards giving Google, Microsoft, Toyota, Coca-Cola, whoever, the cheapest cost of capital, and sort of like doing a pretty poor job at thinking about the rest. Yeah.
Yeah, great. Thank you. Really, really good input from you too. I think I would like to give the mic now over to Jeroen. For that, let me. I think you also prepared some slides to explain. Okay, how does it work like, technically? A little bit more. How can you use a house as a collateral, for example? And
Yeah, exactly.
let me share the screen because for that, Lucas, you will be on the panel again. Let's we're just gonna share the slides and then you'll be back. Perfect. Okay. Now you can share your screen, or I can also do it.
It's still telling me that it's not possible, but I mean, I can also talk without the slides. I think that's okay. Unless you know how to do this. No, I think it's fine. You can react, Lucas, and I can just talk without slides. I just wanted to give a little bit more of a practical example of how like a real world asset actually goes like on chain and how it actually goes into this RWA market, because I can understand that there's a big gap there, and it's hard to if you go to the RWA market today, it's really hard to see what's actually going on. But actually, all of this information is transparent and all of it is public. So basically, what we do and what the Centrifuge protocol enables to do together with the Aave protocol is we take an individual asset, so maybe that's a house for that is being financed through Neil Silver, and we tokenize that asset. So we create an NFT that represents this asset, and it represents the information about that asset, like how much is it worth, and like who's borrowing against this NFT, and so on. And so that NFT is minted on Ethereum, and you can look up any of these individual assets. Then what we do is, like Lucas explained very well, we want to create kind of a liquid marketplace for that. So rather than financing an individual asset, we actually bundle different assets into a pool. So for example, there's the New Silver pool, which is about just over 100, I think, different assets right now, all of them real estate across the US. And so there's basically 100 NFTs that are bundled together through a bunch of smart contracts and put on chain. And really, what's interesting here is like if you go to the Tinlake UI right now, there we are. If you go one slide below, you can actually see, right? If you can actually go to any of these pools and you can actually look up what are all these individual assets here. And I mean, this is not like looking at like this, you don't really see much, but it is really, I think, a big step forward compared to the traditional finance space, where everything is very intransparent. It's very much run through Excel and documents that are very much not public. And here you can really see, like, I'm investing in this pool. What are actually the assets that are backing this pool? So yeah, that's kind of, I think, an interesting innovation. And then the next step that we do is we've taken individual assets, we've created NFTs out of them, then we've bundled these NFTs into pools. And then what we do, each pool has two different tokens that basically represent shares of them. And we take the drop tokens, which are kind of the safer dropped investment shares in this pool, and we put those drop tokens into the RWA market. And basically what this means is that if you're investing into the RWA market, really you're investing in kind of a diversified basket of different asset classes. So if you go one slide more down, Anna, if you look at the current state, I think this was a few hours ago, of the RWA market, you can see there's about 9.3 million in USDC in there, but there's like 7 different drop tokens below that. And really, like what this means is there's like real estate, revenue-based financing, supply chain finance, I think emerging market finance, and some other things in there that are all backing like the USDC that you're investing in this. And this, I think, is also really exciting for investors, because right now, if you want to invest in something that's uncorrelated to crypto, you might need to go to Tinlake and invest in a specific pool, but that really requires a lot of research, a lot of diligence. Whereas with this, it's more simple experience. You can just put some USDC into this, and you're kind of getting exposure to different forms of real world assets. Yeah, that's kind of what I wanted to talk about today. I think maybe we can stop the screen sharing and re-invite Lucas.
Yeah, I will. Thank you. I mean, if you want to see it yourself, the link is also shared here on the right-hand side. So, okay. And so, as I said, we also have a little like surprise guest. So actually, we have Mike also on the panel today as a surprise guest, and Mike will explain a little bit more what are the different real world assets, and so hi Mike.
Hey everyone. Yeah, I am going to just hopefully zoom in a little bit on what Jerome said, maybe highlight and give some color and a little bit of a human touch, hopefully, to some of the businesses that are actually borrowing from the market today, why we're excited about them, why they're diverse, and kind of at the end of it all, like who they touch and what people are actually affected by these businesses. So the two I actually wanted to zoom in on are Branch and New Silver. They're two very different profiles. Ultimately, one's an emerging market micro lender and one's a U.S. real estate lender, so very different. But I think that highlights the diversity and the ability of DeFi to touch so many different businesses and people in a kind of less friction full way, and with taking down traditional barriers that these businesses might experience to raising capital at a fair rate. So first on Branch, which we think is it's a super exciting business, super high growth, touching very many people's lives by giving microloans via smartphones in various emerging markets across Latin America, Asia, and even Africa. They are, a well-funded startup, have raised almost 200 million in equity. They're partnered with Visa. A16Z did their last round. So, they are a very reputable borrower in our view, but also a very exciting use case for DeFi where, maybe a lot of people might turn away from emerging markets historically or may not have the lens to properly evaluate the data-driven underwriting models that they're promoting. So this is a pool a company that's overall has 4 million plus customers, done 21 million individual loans, and has loaned almost $1 billion to these various borrowers. So, they have a good track record. It's something that us at Centrifuge can get very excited about from an underwriting perspective, but also, a very interesting business model to bring in the fold when you compare it to something like New Silver, which is actually the largest pool right now on Centrifuge and does U.S. real estate lending. So they've borrowed 25 million total in Centrifuge, are one of the biggest constituents of the real world asset market. And again, they use a data-driven business model to underwrite loans in the U.S. real estate market more efficiently and more accurately than the traditional finance system was allowing for real estate lending, where you really have to go into a bank and deal with an individual. So why I really bring up those two is because I think they're super different business models, but bringing them together and drawing liquidity under one source allows them to reach DeFi very broadly, many users, and it allows DeFi on the other side to broadly reach many businesses and ultimately many end borrowers in a diversified sense, where we're mitigating risk through lending to a bunch of different businesses and a bunch of end borrowers, and giving investors that kind of decorrelated, diversified portfolio in DeFi that doesn't really exist today. I will leave it there, as I know that we're tight on time, but I just wanted to introduce those two originators that we work with and that are kind of an important part in the real world asset market today. Obviously, we hope that there'll be more originators like that joining in the future. But yeah, a little bit of real world DeFi.
Thank you very much. I think it's always good to have a little bit of a human touch and not just see numbers and the issuer names there, to actually get an understanding what they're financing and how DeFi touches the real world. So as I said before, now we're going more into like a freestyle Q&A session. I already see that a few questions got asked, so I think I would just go go through them and see. So the question with most votes is, how do the Aave token and CFG token incorporate into the RWA market?
Let's talk about governance, Stani.
Yeah, that's true.
Yeah. I mean, Lucas, do you wanna start?
Well, I mean, I'll try. Yes. So the idea of what the Aave protocol needs, right, is for an entity, is if that's a DAO or someone, to manage basically the risk and the exposure to different assets, right? And I think that in the Aave market, that's actually those are the Aave token holders. Today, the real world asset market has the same needs, right? Like assets need to be added to the market. They need to be then taken, like the risk parameters need to be set. So like the collateralization ratio, the liquidation thresholds, there's a few parameters. And that's really what ultimately the token holders governing the protocol should do. So far, the process we followed here was using Aave snapshots to just sort of get community feedback. But what I'm excited about is actually for the Centrifuge and Aave communities to start working together on actually building underwriting tools and risk teams that can do the kind of risk assessment, not just for ETH and Wrap Bitcoin and Aave and all these other assets, but also for stuff like real estate or what Matt just talked about, right? Consumer loans in emerging markets. But that's very high level. But maybe Sunny, like how do you think of and the real world market is only one of many markets that you have launched besides the main market on Ethereum. So how do you think of governance and how projects with different tokens can work together on that?
Yeah, I like the most valuable thing for me for governance tokens is definitely like absolutely it's the governance. So like you're not only kind of like you're as a community pretty much coming together to decide, let's say, what kind of risk parameters should be applied into different markets, which has been done pretty well if you look at decentralized finance in general and how many of these communities are doing it in community basis. And given that the historically cryptographic assets are quite volatile, that has been very successful. And what's nice to see is that all of these protocols, they are self-sustainable, meaning that over a period of time they collect income or revenue reserve factor depending on the protocol, and essentially creates this kind of like an infrastructure that is self-funding itself, which means that then that can be reallocated into different grants, building new things, building more infrastructure into events and different kinds of ways to support the whole ecosystem. So I think like that's quite important factor. And you know, these protocols are community owned, meaning that when you supply liquidity as a community member, you're getting more and more governance power. Essentially what the Web3 kind of like promises to do. And I think in DeFi it works pretty well, but especially I like the fact that, you know, if you are able to tokenize assets, real world assets, getting them into the Web3, being able to supply them, being able to supply liquidity against them, and being able to get governance power and decide how this infrastructure will be evolving in the future, that is very big. Rarely we see an opportunity where you could, you know, whenever you send a payment with Swift network or any from one bank to another, you definitely are not getting any, you know, equity from those companies. So it's like, and of course, like the protocols are not companies at all. It's pretty much infrastructure as IPFS or, you know, HTTP protocol or IP and so forth. So like this should be like public goods anyways. And the difference between like the difference and powerful aspect about protocols is that they scale very well. So if this is the way to onboard real world assets, it means that that will be scaled as a standard everywhere. That has been seen already, like with internet, like Web 2, Web 1 protocols already. So, you know, HTTP is used by billions of users and so forth. So it just brings the scalability. And because it's a public good and governed by the users, it's quite amazing from the community standpoint. So that's like kind of like the value proposition I see like as a community member.
So like I think the fact that this is like a public good or sort of a protocol, right? Like I think that it's really hard it's really different thinking in that you have to sort of apply when you think about these protocols, because ideally there isn't like this isn't owned by anybody, and therefore there's also not someone that might want to in the end like try to push you out or like tries to go for even greater and greater power over the product, right? Like in ways that you see like Google just trying to own more and more and more of your internet behavior and influence more and make the most money on it, and everyone else making money when you use the internet is basically seen as like a threat to Google's profitability, right? I think DeFi protocols a lot of times actually decide to do like one thing very well and then work with that, right? And for example, like Centrifuge, like I don't think we should have to launch a stable coin and start owning a stable coin, because actually there's so many good stable coins out there and they're so easy to integrate. Likewise, a lending protocol like Aave, like this is something that we now become part of, and that makes it much faster to grow, much easier to integrate, and you're now sort of like really thinking about how do we build like the broadest platform. And that's also like where I think of like what the power is of DeFi and really what we want to do with the Aave market, with the real world asset market, is sort of like lay the groundwork for real world assets to become like ingrained in DeFi, right?
Yeah, absolutely. I'm really looking forward how the governance processes of the real world asset market works together and takes like the best things of the Centrifuge governance and the Aave governance, and then how it can how the community can be involved even more, and also adding like more on different assets to the platform as well. And so I have I think a question that might also be interesting for the rest of the people is like, what was the motivation when you decided, okay, let's build this real world asset market? While I have you here on the panel, like Lucas and Stani, like how did you get this idea on, and when actually?
I don't remember when. Do you remember when we first started talking about this, Stani?
I think we talked like many times, and then at some point we were thinking like maybe this is something that should actually happen, and it happened. Like most of the best things in DeFi. I think like usually like ideas come like within communities like from multiple directions. So usually when me and Lucas we talk pretty much what other people talk in the community, you know, real world assets, how they could be incorporated, and we've been discussing about the topic together, and essentially we realized like the timing is pretty, even like the timing wise, I was thinking like maybe this will come later point, maybe it's next year or something, but obviously Lucas and his team has been very eager and excited to bringing it into life as soon as possible, and I've known the team for the past years, and I'm very sure that they have been like very excited about like getting this far, and also like into this kind of like a live production. It's been like a very, probably one of the most complicated things, because when you build something where you have like permissionless infrastructure, smart contracts, that's one thing, and the security around that. But then you have the other thing is actually all this like compliance and everything, and the legacy elements there that you have to kind of like layers to make it work. So the level of complexity is definitely another level, and many like a puristic protocol developers will just avoid of even going to research or even like tackle those kind of like issues. So I definitely have to say that Lucas and his team has been doing like amazing job on actually making this happen. So yeah, I'm very excited, to be honest.
I mean, the legal for us, like it kind of always was inevitable that that real world assets are going to become a part of DeFi. I think there were like 3-4 years ago, we were definitely in a very small minority. And I remember Aave doing like first experiments with like credit delegation, with ideas of how do you bring real world assets into it. But I would say like it took DeFi probably until like last year to really see, okay, well, like there's all this cool stuff that we've built. And maybe actually it also makes sense to start thinking about real world assets and sort of like the legal overhead, or there is actually a way for the real world and the code governed crypto world to come together and interact. And yeah, so I think that the timing is definitely right. I think we will see though that like the DeFi and crypto is going to grow, and it's going to become as big as the internet, I believe, and even bigger. And it's going to be a huge part of the sort of the asset classes in the world. It's the same way that like tech stocks today are actually some of the biggest stocks in the stock market. I think crypto is still very small to where it will be in the future, but nevertheless, right? Like we're not going to transcend our physical space and just become virtual beings. And so there always will be like a need to actually build this bridge to the real world assets, and there will be property and materials and trade finance assets that will be a massive part of what finance is today and will be in the future, right? And that's where I think we're ultimately going to work to, is bringing those assets into DeFi, into the Aave protocol, and sort of using Aave protocol for something completely new, right?
And I think like kind of like I really believe like we can create a lot of things in metaverse, and we will have like property there, and there's like this unlimited space, but also like that's kind of like a one approach, and that's like very easily composable and can be supported. But when you think about like real world assets and where things are evolving, society and humankind is always like expansive and looking for solutions and everything. And if you look something like, for example, the space economy, all the satellites there, and all the rockets that we are launching, and more infrastructure is going there. There's sort of value in infrastructure because it has also utility. And like there's components where you have a lot of synergies in decentralized finance, because you could tokenize something like a rocket ship, put it into this is like just hypothetical centrifuge space economy market, and you put the tokenized spaceship into which is worth of, let's say, 60-80 million, put it into as a collateral, get finance against it, and then essentially that asset is there. Maybe it could be reused. You could actually make a insurance, like a put and call option, something like opium or some opium finance and whatever. You actually have like a very like composable infrastructure once you get those assets in tokenized shape into the Web3 economy. And if you look into like if like humankind is expansive, and we see more and more infrastructure being built, utility and everything, like it's definitely like I would rather have that infrastructure on chain than anywhere else, especially like autonomous infrastructure that is running in space somewhere. So there's sort of cool things you can actually build, and I think like the stuff that is now tokenized in Centrifuge market is good because it has a yield element there, and the products are chosen carefully. Like I think there's a lot of crafting there in terms of like the kind of like a market fit and everything. So I do see like someday there will be like some very, very particularly cool assets, and this brings a lot of opportunities. Like you can anywhere, any part of the world, when you basically when you can participate in your market, you can do like you have a lot of opportunities. And that's what DeFi is all about, and the transparency.
All right, nice. I think that's a good outlook. We have like 3 minutes left, and maybe so since we're talking about like the future and the outlook, I think I have like the final question is basically, where do you see the RWA market in like 1 to 2 years? Maybe Jeroen, where do you see the market?
Yeah, I think we've touched on a few topics already, but I think there are a few key themes. One of them is, I mean, Centrifuge is always working on bringing more real-world assets into the protocol, and I think we want to bring a lot more assets into the RWA market as well. Right now, there's 6 or 7 drop tokens in there, and we really want to try and see this grow to many more, like 20, 30, 40, and grow it from there. With the goal that like really this is the kind of the most diversified place for real-world assets. So that's one key area of growth. The other is definitely like decentralizing the governance that Lucas and Stani already talked about, like really making sure that the Aave governance and Centrifuge governance are both involved in this market. And then the last is technically, and I think I saw a question about this as well, is that Centrifuge is currently working on our own blockchain, Centrifuge chain. And I think in general, like we're trying to create this layer 1 for real-world assets, and that fits very well with what we're seeing now, this kind of multi-chain universe where I think Aave v3 is already deployed on like 7 testnets or something like that, which is really cool to see, and I think really explains what's going on, how we're moving beyond just having a single chain where everything is happening. And I think Centrifuge and Aave can work very well together in this regard, where the RWA market could also live maybe on a different EVM chain or somewhere else, and use the assets from Centrifuge chain still as collateral. Those are the things that come to mind to me. I don't know if Lucas or Stani wants to add anything there.
Stani, maybe, yeah, would like to hear what you think. Also, I mean, you just launched Aave v3. I'd actually, one thing I'm interested in is like, what is the most exciting thing about Aave v3 that we should be looking at, or that the real world asset market should be looking at? And then also, where do you think of the journey will go beyond v3? What does v4 and v5 look like?
Yeah, I think like a lot of stuff has happened in the progress. I think v3 is fascinating. You know, we have this definitely like it's deployed now in testnet in seven different testnets, and the idea is that kind of like that we can do like a as democratic launch as possible, because there's so many interesting like networks out there. And for Aave, like we're very like inclusive community, so we try to like as a community be more kind of democratic when we do launches. So let's say if there's 7 EVMs, we can launch on 7 EVMs, because the v3 protocol is the most risk-averse protocol built so far, not just in the Aave kind of like, you know, roadmap, but in DeFi in general. There is not only, you know, supply caps, borrow caps, but there's also isolated assets. So kind of like you can isolate an asset from other collaterals that you might have, and this mitigates the risk substantially. So we can launch with smaller caps and increase it over a period of time as things are becoming more secure over time. So that's one interesting thing. But there's there is this kind of like a portal mode where the Aave governance can mint, create a whitelisted right to entities to mint per like a permissioned A tokens. So what you could do actually is that you could, let's say, borrow. Let's say you could actually like deposit USDC, DAI, whatever in the mainnet. Then with a bridge, let's say, could actually help you to then post that into real world asset market in Centrifuge own network or somewhere else where it will be living. So under the hood, what is happening is that a bridge burns your A tokens in one network and mints in another network and takes care of the accounting on a limited depth cat. So, and that's backstopped by the Aave safety module by the community. So essentially what happens is that you could do like a lot of cross-chain stuff. Like you could deposit in layer 1 and then borrow actually in Centrifuge market, and repay in, I don't know, Aave Avalanche market, and you have this like cross-chain stuff going on. And it's very fascinating. It's just like mind-blowing. I mean, cross-chain for Aave has been a very big thing. Like even like our governance is cross-chain. So we recently had a vote on layer 1, which enacted on-chain a proposal on the Polygon market in a permissionless fashion, and that's very insane. And I think kind of like going onwards, I think there will be a lot of like networks and also asset-specific networks. For Centrifuge, it makes a lot of sense for having on network because you could actually create once you have this bridging, you can create an ecosystem around of those real world assets, and you will see like other applications built specifically that use case. There's a lot of transaction volume that can be created. Essentially, you can create asset trading where you have tokenized London real estate, New York real estate. You can go short and long. It's like just insane what you could do with that value. That's just like thinking very long term. And of course, like for us, I mean, it's very, when we're in mainnet and the V3 is working very well, it's interesting to see like how to update the V2 market of Centrifuge to V3 and scale it. So that's what I'm excited about.
Yeah, that will be a fun migration. Let's see. How is I guess we'll be able to follow the Aave V2 migration. So luckily not, but yeah, this will be interesting. I think governance and cross-chain governance and cross-chain swaps are going to be super interesting as well for us, because it's sort of how we think about Centrifuge chain and in its interactions with other chains is like we use it to create these pools, and so issuers create their tokens and then they can move them to wherever there is a need for liquidity, right? And actually, I would love to see a future where there's basically like these real world asset tokens are accepted as collateral in many different chains, and so you can arbitrage low interest rates on Avalanche versus high interest rates on Ethereum and actually start moving tokens around, right? And so like I think what Aave has been doing there is actually quite interesting as a way to make that even faster, even simpler, because you kind of like can avoid all these bridges. Yeah.
Great. I mean, I think we're a little bit over time now, so it's nice. It's good. I really enjoyed this panel, and if there's something you want to share like last minute, Lucas, I didn't want to cut you off.
No, thank you for hosting, Anna. It was fun to chat about Aave and Centrifuge. Yeah,
and also the future outlook. I really liked like how we kind of stepped outside of the details a little bit and then had a look how it could be, what could happen in the future. Stani, Jeroen, anything else you want to add? Final words.
Nothing from me. I think it was great. Go ahead, Stani.
No, it's has been like amazing hour and just discuss a lot of things. And I think also I urge like different builders to contact Lucas as well if you're interested in working with real world assets and maybe building something cool on top. That's might be very nice idea. Other than that, I'm super excited.
Yeah.
All right, great. Thank you, everyone, and hope we see you soon.
Yeah, and go check out the market, see what's going on. Have a good
Thank
one.
you. Bye.
Bye.